Yeah. Good morning, everybody. This is the Live Market Open for Wednesday, April 6th. I'm Yohay, I'm a Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Today, as always, in the mornings, we'll cover recent developments in markets, go over various charts and levels, talk about the next 24 hours. We have one big event standing out, and of course, answer your questions. So if you cannot see the chat, please put the questions in the chat. If you cannot see it, please go to this address, https tlk.io/fxread-forex-live-video. Okay, what's going on in markets? Well, yesterday we talked about a worsening mood, a risk-off, things looked bad, stocks were falling, oil was falling, the yen was strengthening. Now we're seeing a calmer day. So in Asia we had calmer markets, all right. Oil prices stabilized. We'll talk about why that happened. And we have some stability. The most stable currency pair is euro dollar in a very, very limited range. Other news that impacts people talk about markets is the Wisconsin primaries in the United States. So we had Cruz beating Trump. And that gives some hope for moderates, even though Cruz is really not a moderate. But at least the Never Trump campaign has some hope. And Sanders beat Clinton, and that's in Wisconsin, but that was more or less as expected, with the margins expected. Not really news. We have so many more primaries. We still don't see a real impact on markets. A bigger impact is the Icelandic prime minister. Iceland is a small country of only 320,000 people, but he quit over what was revealed in the Panama Papers, his involvement in offshore companies. So, and of course, we know already that the late father of David Cameron, UK Prime Minister, is also implicated in some way, and more revelations are coming. Okay, so it's not the end of the revelations, and certainly not the end of the political impact. So this was quite quick. I mean, the papers came out Sunday night, and within 48 hours, after huge demonstrations in Reykjavik, he was forced to quit. Processes are a bit slower in other countries, of course, but watch out for events over there. This could shake the political system more than the money moving from offshore havens could move. And the reason for the stability in oil prices is that American Petroleum Institution showed a draw in oil from its according to its surveys. So less oil in storage means higher oil prices. It was sort of the excuse after the big fall of oil prices to rise. Remember that API is not as important as the crude oil inventories released that we have today from the Energy Administration. So that's not the end of the story. And in terms of data, yesterday we had, UK services PMI coming out as expected, 53.7. Same with retail sales in Europe as expected. The US and Canadian trade balance figures both missed, but at least in the US we had a rise in exports. Most importantly, yesterday, the biggest figure, the ISM non-manufacturing PMI, the report for the services sector, came out better than expected, 54.5, slightly better and than expected and significantly better than last month. So that was sort of a positive for the US economy. On the other hand, the JOLTS figure missed with 5.45, not a big miss, but at least the levels of quits are higher. More quits, more people quitting their jobs for another job is a good sign for the economy, sign of confidence, high sign of rising salaries, but as we know, salaries are rising very, very slowly. More good news came from New Zealand. For New Zealand, milk prices rise 2.1 after falling last time. So that supported the kiwi, and sort of helped the kiwi halt its big slide because we had this risk-off sentiment yesterday that sent even dollar yen below 110 very temporarily. We'll soon look at the charts, and some good news this morning from China. The services PMI came out better than expected at 52.2 points. So I would say all in all, relatively okay and even good news yesterday in terms of indicators. Quite a busy day of indicators. And we had some stabilization in markets. So before we look at the charts, here's the China Caixin Services PMI rising from 51.2 to 52.2. This morning, I forgot to mention, industrial output in Germany came out slightly better than expected. Or significantly a smaller fall than expected, 0.5. On the other hand, we had a downwards revision. Last month's growth was reported initially at 3.3. Now it's only 2.3. So it's sort of a bit mixed, but at least the most recent figure is better than expected. Okay, so this is euro dollar. Very, very, very choppy. Can readjust. Sorry, not this one. This is the line I talked about yesterday, but I really wasn't sure it's relevant. This uptrend, we had a break below this uptrend support, but back up again. Not really serious. I would say that more support is around here. This is some kind of a double bottom here at 113.35. Okay, that was the low yesterday, and also on Friday. Okay. Anyway, we're currently in this range, 113.35 to 114.10. Most of the time trading in a much narrower range. Question from Fabian. Good morning, Fabian. Good morning, Jake. Good morning, Luca. Didn't the U.S. Department of Agriculture Corp report that dairy prices were to decline this year? Also, Frontera auction. Not everybody agreed that the kiwi was doomed. We did see in most months this year, in most auctions, it comes out every 2 weeks, that prices were falling. But let's jump to that. That was the figure released yesterday. I can show you in the graph here. This is, of course, the FX Street calendar on Forex Crunch. Here we have it. So this time it rose 2.1, but after a fall of 2.9 last time. And if you look at recent weeks, basically from towards the end of the year and the beginning of this year, most auctions have been negative, okay, including this big fall of 7.4. And here we had 1, 2, 3, 4 consecutive falls in milk prices, one rise, another fall, another rise. But it's not, as you say, the bigger picture is not so positive for milk prices, but every small change, every bi-weekly auction makes a small difference, okay? At least has an immediate impact. Let's jump to the kiwi just to conclude this topic. Currently under the previous resistance line, support line, the big separator of ranges of 68.20. Okay, so currently we're around 68. We did fall yesterday because of the worsening market mood, but the better than expected milk prices here around the European afternoon, the US morning, 2 GMT more or less. This did give a boost to the kiwi. It did help it recover. The kiwi did cut rates, so that hurt the kiwi. But the reason that kiwi dollar is so high and also other currencies are so high against the US dollar is because of Yelen's second dovish speech last Tuesday in New York. She was so dovish, and that killed the dollar. Now, this week the dollar is recovering, better than expected NFP on Friday, and better than expected ISM figures yesterday, also on Friday. And once again, a few of her colleagues talking hawkish. Evans and Rosengren, both Feds, went a bit to the hawkish side. And also this risk-off sentiment is specifically hurting commodity currencies. That's the dynamics of the... So it's not only the big picture you should look at, but also the day-to-day movements. With the bigger picture is better reflected perhaps in the pound. Okay, because the pound is suffering. It did rise with the weakness of the dollar, but it always remained the weaker link. Yesterday we had actually figures coming out better than expected, services PMIs. Nevertheless, the pound is on the back foot, currently holding on to support at 141.25, resistance 141.75, big support at 140.50. Okay, very, very strong line of support. In the UK, we have economic figures are still good, but Tata Steel crisis, Brexit fears, political future of David Cameron, you name it, okay? But mostly Brexit, of course, well, which is impacting his political career as well, but other stuff as well. Dollar yen was a huge mover yesterday, falling under 111, making a big move to the downside. Yesterday, it even dipped temporarily under 110. Didn't go too far. You could say this was stop hunting, okay? Stops were picked and then the pair moved back up, or perhaps there was some kind of intervention. Looking at the chart, we don't see a really big spike, so I wouldn't call this an intervention. I would call it more like stop hunting, okay? Anyway, 110 remains strong support. It's a very round number. 111 remains resistance. Dollar yen, the yen has strengthened. Yesterday we heard noises from officials in Tokyo saying there's a meeting between the Ministry of Finance and the Bank of Japan, okay, to sort of try to deal with what's going on in markets, to understand, mitigate the situation. Eventually, as far as I know, they didn't do anything, or at least didn't declare anything. Okay, so nothing to report on so far. All right. Let's continue with dollar CAD. Dollar CAD, well, rising because of oil prices, but this fall in oil prices helped it get back under this line of 131.70. It already reached high resistance at 132.20. So dollar CAD is behaving quite nice in technical terms. Look how it stalled under 132.20 back in March 23rd. This line later worked as support, and then once again as resistance on March 29th, and now once again as resistance. So 132.20 is very strong resistance on dollar CAD. Currently we're in a low range, 130.80 to 131.70. Okay, Aussie dollar. Yeah, we had earlier this week the Reserve Bank of Australia, well, not changing policy and also being really relaxed about the strength of the Australian dollar. So that helped the Aussie quite temporarily, because that happened actually yesterday morning, because we had this doom and gloom. So we can see the spike right here and the good news from the RBA, then the fall together with all the rest. Now we're bouncing back up, well, sliding during the first minutes here of the show, but the better than expected services PMI in China is good news, because it's an independent figure. It shows, for those wanting to believe, that China is making a good transition from manufacturing and investment and infrastructure to all the way to consumption and services. So this is good news. Okay, Kiwi dollar, we already talked about that. Well, hugging 68, now sliding just a bit. Dollar Swiss, well, it moved up from the lows, not going anywhere fast, I would say. I would say 96.40 is resistance. Stronger support should be here. Anyway, remember this currency pair is prone to intervention by the Swiss National Bank on this specific one. So we are seeing some kind of slide to the 108 handle, but going nowhere fast. The range for this morning is less than 20 pips. Anyway, a bit of a slide here. A slide could trigger some kind of soft intervention by the S&B. Euro pound, okay, we had an initial false break above 80 cents, and now we're seeing it move higher. This is the line I put yesterday for some reason. Anyway, we're gradually moving higher here. Fundamentals are currently worse for the pound because of the Brexit fears. Remember that if Britain really leaves the EU, it's of course worse for Britain, at least an impact on trade, but it could also have a devastating effect on the European Union. Could be the beginning of the end. Nevertheless, the pound looks more vulnerable, and the pair gradually moves higher. So I would say 80.50 is the new line to watch on the top side, what we've seen yesterday. And perhaps, well, this line is a bit old, 80 cents, the round number. After a battle, I think it has been conquered. Good morning, Sinatra. Yeah. Euro yen. Well, we've seen the safe haven yen being the king of safe haven currencies. Now we're seeing, well, we saw euro yen deteriorating, now stabilizing just a bit because the yen managed to stabilize, the euro managed to stabilize. So we're in a very relatively narrow range for this currency pair. 125.43, yeah, under 126, not moving anywhere fast. And here we are definitely seeing big, huge movements. We've seen it, pound yen, the dragon, the Gepi, trade 158.50 to 160, move all the way to 162.50. And then we've seen the crash, a small battle here once again. And now we're even below this low seen back here in late February. So 156.10 is now fought upon. Next line, perhaps the low line is 154.66. That's important because that was the lowest level seen this year, and actually the lowest since, wow, back in late 2013. Okay, so if we break under 154.66, we're in multi-year lows, currently battling this line. Comment here, we should see a more balanced view in the Fed minutes after the uber dovish yelling. Shouldn't we? Many doves came out with the hawkish tilt over the last couple of weeks. Yeah, that's certainly possible. Of course, that's the main event for today. I'll talk about the Fed minutes soon. I'll just complete the roundup here. Oil prices, as I said, they managed to do a turnaround, a U-turn, fell to close to $35, but this API report, better mood markets, helped them stabilize back to the 36 handle. 37.60 works as some kind of resistance. Anyway, this is of course supportive for oil prices, for stocks, and for the general mood in markets. Okay, now let's talk about the event for today. And yeah, you already hinted about the main dish, the Fed meeting minutes. Okay. So other events, well, the calendar is very, very light. We had the German industrial output. We'll have Canadian IVPMI. Used to have more impact, but for those trading the loonie, watch out for the 2 GMT release. Crude oil inventories, as always, is a market mover. After the API expectations are probably for a fall in inventories, another boost to oil, but these figures are not always well correlated, so we could see things move both ways. At 4:20 GMT, we have Loretta Mester of the Cleveland Fed, if I'm not mistaken. She's relatively hawkish. Let's see what she says. So far, she hasn't moved markets too much. And then, of course, the main dish, the Fed meeting minutes at 6 GMT. That's 8 here in the old continent, or 7 in London. So what can we expect from the Fed meeting minutes? These are the minutes from the March 16th meeting. That meeting, the Fed did not make any move. That was widely expected. The big surprises back then were the dovish tone. It was not only that they lowered the dot plot for this year from showing a rate hike path of four hikes to they cut it down to only 2. They also cut the expectations for the next few years, including the final, the higher rate, okay, the maximum. More importantly, their view about inflation was very worried, very uncertain, despite the fact that in the same day core PCI came out actually better than expected. They were worried about investment, about exports. We already know that regarding investments, they do have some kind of a case. They continued banging the drum of global worries, including China, despite the fact that China did a lot to support growth, pledging 6.5% growth, cutting the reserve requirement ratio, and means that banks can lend more money. Despite all the well, easing from the ECB, the Bank of Japan, negative rates in Japan, further QE from the ECB. Taking all this into account, they still decided to see the glass half empty. Okay, there was one dissenter, Esther George of the Kansas Fed. She's a known hawk. It just goes to show how dovish the statement was. Now, between that and afterwards, we had a few hawkish statements, as you said, from a few colleagues. These included the hawkish colleagues such as Bullard, Lockhart, but also the moderates like John Williams, and also doves like Evans and Rosengren talked about still about 2 rate hikes this year, that the market is not pricing in correctly the number of hikes. Market is pricing in at the moment only 1 hike in December, no hike, of course, in April, when there's no press conference, and no rate hike in June when there is a press conference. And this also would be a very good timing to raise rates because it's far enough from the general elections. Okay, now this hawkish tone from her colleagues said, okay, maybe she was misinterpreted, or maybe some kind of balancing. But then again, last week she went extremely dovish once again, repeating and even seeing a worser outlook again, talking about, being that caution is especially warranted. Okay, so a bit of a higher rhetoric that really crashed the dollar. Now you said, so now even after she spoke, we heard again from the doves that went a bit more optimistic, a bit more hawkish, Rosengren and Evans. The markets didn't react too much because they're sort of once bitten, twice shy, if you wish. So now I have the minutes. What should we focus on the minutes? Inflation, number one. Well, maybe not in that order, but let's list the stuff. The employment situation is good, so they're not going to talk about that, about employment that much. Inflation is important. Why do they see the outlook as uncertain? Why did they cut inflation forecasts despite rising inflation? Maybe we'll see there another mix of opinions. Global worries, are they really that worried? I mean, things have stabilized. Those are the 2 main things for me. Another one is mentioned the hawkish members, the center. Was Esther George alone on the hawkish side? We know that there are 10 voting members, and we know who voted what. So we know that she voted for a rate hike, and 9 of her colleagues, including Chair Yellen, voted for no change. So, but all in all, there are 17 members in the Federal Open Committee, if I'm not mistaken. Some of them are non-voters this year, but their voices are heard in the meeting minutes. Okay. Now, in many cases, you would say the minutes are stale. That means that, it was from a meeting held 3 weeks ago, right? And things have changed since then, and it's irrelevant. I don't think that's the case for a few reasons. First of all, we know that the minutes are edited for the press release until the very last moment. So they could change the wording. It's not really a raw recording of what happened. It's not the protocols, the exact numbers. It's more a document that is meant for the markets to consume. That's relevant every time. In this specific case, the data was more or less as expected. I'm referring specifically, of course, to the non-farm payrolls, but also other figures were sort of as expected. So it's not that the world has changed a lot in the past 3 weeks. Sometimes this is the case, but in this specific release, it's not the case. So in many cases, members tend to be, the minutes tend to be a bit more hawkish than the statement, or the other way around. I mean, if the statement went to the dovish side, the minutes go to the hawkish side, or the other way around. So we might see it a little bit more hawkish, a little bit more optimistic, upbeat, but I wouldn't bet on that too much, because we know that the Fed is in general dovish, and that they always intend not to rock the boat, to keep things relatively balanced. Okay, so so my tendency also is to expect something a bit more upbeat, a bit more hawkish, repeating the stance that, well, the big picture is that the next move for the Federal Reserve is still raising rates, not cutting rates, not negative rates, not more QE, okay? It is raising rates further, including at least once this year. So I also think that tendency is for a more hawkish one, but always be careful with the Fed. Last time it was a real snooze fest, by the way. It didn't move markets at all. This time I do believe, and I am optimistic that we will see it move markets. Yeah, so that's a very long preview for the Fed minutes. Again, things to watch for are inflation, global outlook, and how many people did support a rate hike, apart from the voting member Esther George that wanted that. My bias is a bit more hawkish, but it'll probably be very, very, very limited. Okay, let's continue after the long preview. It's, well, the main event for the day. I'm not sure for the week, but if you didn't have enough Fed after Mester end, of course, the minutes, we have James Bullard at 10:30 GMT, late at night. He's a hawk. And then we'll have Kuroda of the Bank of Japan talking also at night at 12:30. Let's see if he ups the ante regarding the state of the Japanese yen, which is strong. Speaking of the yen, let's look at currencies. Let's take another look and see what's going on in markets. So euro dollar is sliding just a bit this morning, but it's basically in the same range. Well, pound dollar. So we are seeing a bit of a stronger dollar this morning, but it's not. The moves are not huge. Okay. Also, dollar yen is basically in the same place, keeping a safe distance, or at least for now it seems safe, from the 110 level. Yeah, so the US dollar is showing more strength against the Canadian dollar, rising now to resistance at 131.70, and also against the Aussie and against the Kiwi, well, just a bit. So moves are a bit more limited in the euro and no, I would say in the yen, but a bit stronger in other currencies. So a bit of a stronger dollar this morning. Okay, moves yesterday were much more significant with the surge of the Japanese yen, of course. Yeah. Any questions? Let's see if I didn't miss any event. Oh, before that, chances for rate hike in June, according to bond markets, stand on around 20%, very, very low. April, of course, it's next to nothing. July, not really. September, not that close. November, well, the week of the elections, very unlikely. And the market is pricing in a rate hike only in December. Okay, let's see if it'll change after the meeting minutes. I'll look specifically at June, currently at 80%. Let's see if it goes to another direction. Question from Jax, why the push to raise rates again? Well, the Fed does want, as they call it, to normalize monetary policy, okay? Which is, of course, normalize. It sounds like a better term than just tightening the belts. And what the Fed said in December when they did raise rates, so far the only time in the past decade, was that the US economy is improving. Labor is, the employment sector is getting tight, and eventually we'll have inflation. They want to raise rates gradually for two reasons. First, that we won't have a situation where monetary policy is too loose. Eventually we'll have inflation which is too high, and then they'll have to raise interest rates abruptly and cause a recession. Okay, that's what happened in the in the early 80s, when Paul Volcker, the head of the Federal Reserve, decided to kill inflation, raised rates very high. A recession was triggered. Prices did stabilize, of course, but it came at a high cost. Another reason is they say that if we do have a downturn, they'll have tools to support the economy. And this is a weaker argument, in my opinion. I mean, they want to make things harder now, so if things become hard, they can loosen once again. So why trigger the situation? But the first argument makes more sense, that the US economy is improving. Yellen did express confidence in that December meeting. Of course, there's no rush. Of course, when I mentioned inflation getting too high, too hot, we're not seeing any of that. All right, so the current situation is, well, they want to raise rates gradually. They also, I think, what they don't say out loud, at least not too much, is when rates have been so low and for so long, and they don't raise them at all, okay, there's this moral hazard in markets that money will be cheap forever, and you can just lend it cheaply and take risks in real estate, in stocks, and of course investments overseas. So they want to prevent a potential bubble. They were hurt, of course, they were blamed. They're not the only factor, of course, but for good reasons, for having monetary policy too loose and not seeing the financial crisis, not seeing the real estate bubble in the United States. Okay, so the Fed does want to raise rates. There is absolutely no rush, as we can see. They prepared us for the first rate hike for a very long time. Of course, the preparation for the rate hike worked as tightening on its own because the US dollar strengthened towards the first rate hike. And that means that a stronger US dollar means sort of cooling demand for US products and also pushing inflation already lower because imported goods were becoming cheaper in the United States. So it did work as some kind of tightening. Anyway, now we're raising rates, but very, very gradually. Okay, they use the words gradually so much. Comment here by Luca. There's a credibility issue as well. They can't say we'll do 4 and then they'll do 2, then do nothing. Market already doesn't take their words seriously. If they keep making excuses, they will lose their credibility completely. Yeah, the Fed made optimistic forecasts for many years. I mean, it's still making those optimistic forecasts and always having to cut them down. They still are credible. They still have a big impact on markets. Everybody knew back in December that talking about 4 rate hikes was optimistic. And also the Fed tells us all the time, I mean, you should listen, they do have their disclaimer. The Fed does say, yeah, the dot plot is only general guidance. Don't take it as is. We are always data dependent. Phrase they repeat all the time, all the members, okay? Central banking is data dependent. Okay, so if when Yellen is asked about the path of rate hikes, she said if things are better, we'll raise rates faster. If things are worse, we'll raise rates slower. So this isn't a commitment. It isn't, it's just sort of guidance. For me, the bigger question is this too much information or not? Should they provide the dot plot? Because the reasons are, okay, we'll give more guidance to markets. It'll help long-term investments. It'll give more certainty, but actually we're not committed to that. So maybe it's just confusing. Maybe it's TMI, too much information, all right? So that's an argument. I think James Bullard, which likes to be heard, he said that maybe it's too much information, that he said that he even considered withdrawing from participating in the dot plot. I don't think that's serious, but anyway, yeah, because maybe it's better for the Fed not to say anything. But we are moving in general to a world of more transparency. So, and forward guidance was used as a tool to sort of set expectations, tell markets, okay, we're going to keep long-term interest rates lower, so please lend money, borrow money, and invest. Okay, so so far they haven't lost their credibility completely. Draghi was a big star. He rose to fame, and he lost his magic in the last 2 meetings. But I think he can he provides such huge dramas. I think he'll be back. Does the Bank of England want the pound to weaken or not? They want it to weaken a bit because that would push up inflation. Then they're currently missing their 1 to 3% headline CPI target. They won't say it out loud. They're not really worried about the exchange rate, as Draghi is worried. So the advantage of these worries currently, the weaker exchange rate of the pound against the yen, the euro, and of course the dollar, helps the Bank of England reach its inflation goals. Well, very, very slowly. It doesn't have such a big impact in the UK, and it also helps UK exports. Remember, the UK economy is not doing that bad. It's more the dark clouds of a Brexit or no Brexit. Everybody wants a weaker currency, okay? I would say that in the UK and in the US, they need it a bit less than in the Eurozone, in Japan, or in China, okay? Or in Australia, New Zealand, where they talk a lot about. We've also seen, the impact. Sorry, just a second. The positive impact of a weaker currency in Canada, because Canada, as you know, depends on oil exports, and the price of oil crashed. But with the alongside the crash of the Canadian dollar, the Canadian dollar crashed alongside oil prices, and this really helped the local economy, which is doing better. And for the Bank of Canada, inflation is also higher. Another question here: is the market tired of a weak dollar? That's a great question. I think positioning has shifted a bit, so it's a bit more balanced. So maybe the market, at least for the short term, is ready for some greenback comeback. Maybe an okay meeting minutes from the Fed could help us out with that. Okay. Regarding euro dollar, the ECB continues printing money, and the US and the Federal Reserve is about to raise rates further. Okay, so in general, that's the path of the path points to a weaker euro dollar. Okay, in the bigger picture, but the momentum has changed. The ECB more or less said that it is done for now. Okay, it can change its mind, of course, but that's what we heard from them. And the Federal Reserve told us we'll actually go slower. So that is one of the reasons. I mean, if you look at the recent price action, the bigger picture in euro dollar, that can explain what's going on there. Okay. Is the market tired of weaker dollar? Perhaps a bit. In the next few days, we'll see it strengthening, but you never know. The Fed can always go full dovish. Okay, I've shown my face a lot. Let's look at the charts and get to the wrap-up for today. Okay, further weakness of euro dollar, further strength of the US dollar this morning. Less so against the yen, more against the euro. Now we're seeing a weaker euro, we're seeing a weaker pound. Yeah, no, I see more strength, more weakness in the euro. Pairs to watch today: the Canadian dollar for crude oil inventories, and I would say the majors for the Fed minutes. That means euro dollar and dollar yen. But if there's one currency that has more indicators today, it's the Canadian dollar with well, thanks Sinatra mentioning that crude oil WTI just touched 71. That helps the Canadian dollar just a bit get away from resistance at dollar CAD get away from resistance at 131.70. So we're seeing it slide. The Canadian dollar is still a bit weaker on the day, but improving its situation. Why does the market react to the Fed so aggressively? They rarely do what they state. I wouldn't say they rarely do what they state. They did prepare us for the rate hikes. They did prepare us for the end of QE or for more QE. They just move very slowly. Sometimes they lift those trial balloons, raise them to the sky, and then retreat. They move very, very, very slowly. And markets react to shifting expectations. And it's the world's #1 central bank. All right. Okay, let's get to the wrap-up for today. This is the wrap-up for the live market open for April 6th. It's a Wednesday. We have some calm in markets, okay? With after the risk-off sentiment yesterday, after the big surge of the yen, especially in the slide of commodity currencies, things are a bit more stable now. But this morning, US dollar is a bit stronger. In political news, we had Wisconsin primaries show sort of a halt, a break for Trump's victories. Trump was trumped, and Sanders beat Clinton there as expected. It's not such a big state. Many more to come. Icelandic PM quits in the Panama Papers. If there's another thing to watch today and the next few days, of course, is the Panama Papers, because more revelations are coming. It's certainly not the end of the story. There's pressure, of course, on UK PM David Cameron. Oil prices are up. Currently, crude oil almost 37 because of the draw in oil inventories. According to API, today we have the more significant publication, the crude oil inventories. Okay, figures yesterday were more or less as expected. Some came out better. For instance, the Iceland non-manufacturing PMI, the most important one, it beat. It showed that the US services sector is okay. Even for New Zealand, milk prices went up, and perhaps for the global economy, it's good to see that China's services PMI is moving up. Today, we have a relatively light calendar, but with one big event. So far we had the German industrial output sliding, but more or less as expected, even better than expected. Canadian market movers, the IV PMI, and the crude oil inventories, which has the biggest impact on CAD. Then we have a Fed fist. Loretta Mester speaks at 4:20 GMT, the Fed minutes at 6, and Bullard at 10:30. The meeting minutes are, of course, the most important ones. It's from the March 16th meeting that was very, very dovish. Things to watch are how the Fed sees inflation, how the Fed sees the global worries. These two things surprised me, and their dovishness also from Yellen last week and also 3 weeks ago with the Fed statement. Okay, and another thing, of course, to watch is how many of the members did not really support keeping rates unchanged or having this very dovish statement. We know we had one dissenter, a voting dissenter, but the internal discussions are, of course, also important. My bias is towards a slightly more hawkish outcome from the minutes in comparison to the statement, but be watchful, careful. The Fed in general is dovish. Okay, we have also a speech from Kuroda late at night. Quick look at the charts in our wrap-up for today. The dollar is generally stronger across the board. Euro dollar is well entrenched in range. Range is from 113.35 to 114.10. Currently sliding towards the lower end of the range. Let's see if we can ever break lower. Pound dollar also on the back foot with all these worries. 141.25. Weak support, very strong support at 140.50. 145, 175, and 142.40 resistance. Dollar yen, the magic line is, of course, 110, resistance at 111. Let's see if we have another attempt to break under 110, perhaps the line in the sand for the Bank of Japan. But they've had other lines in the sand, and it turned into quicksand. Dollar CAD, 131.46. It stopped exactly at resistance at 131.70. Further resistance, 132.20, which is also a strong line. Support 130.80 and 130. Aussie dollar, well, not doing that. Not too shabby for the Aussie this morning. Better than expected. Chinese services PMI certainly supports the Australian dollar. 76, I would say, is the next line of resistance. And the Kiwi dollar fell under 68.20. Nice technical behavior there. Support at 67. Okay, so I guess that's it for today. This is of course, the expectations for rate hike according to bond markets. Currently, 20% only chance for a rate hike in June. Let's see how we compare this for tomorrow. Well, before we go, perhaps another reminder of the events we have later this week. I mean, tomorrow's events. Tomorrow, of course, we'll talk about the Fed minutes and other events today. And we'll talk about the expected speeches from Janet Yellen and Draghi. So to answer tomorrow's question from Jax, the main pair to watch tomorrow will be euro-dollar, without a doubt. Okay, and on Friday we have the Canadian jobs report. So I believe we'll have attention towards the Fed minutes, and then some action, and tomorrow lots more action. Okay, so that's it for today. Thank you very much, everybody, for coming, for the great questions. Watch out for the Panama Papers, for more revelations, for more political victims. No cheating. And yeah, and I'll see you all tomorrow. So thank you, and bye-bye.